everybody to the second interview on the Lightman report. I would welcome everybody who's joining us today or on a later date. Let me introduce very shortly Alex Lightman, I think
Hello.
very writer, futurist, fintech expert, and Eric Yu, CEO of Metaverse DNA, and a long-time experienced entrepreneur in the field of blockchains and cryptocurrencies. So,
hello, everyone.
Hello. We're doing this digitally. It's a new development. I think we're going to be stuck with this until the end of the year at least, because we can't travel international anymore. And it's our way to build a community and have discussions online about all sorts of developments. So last week we had a deeper look into e-commerce, and we saw some speed in the transitions into that field. But of course, other fields in the economy have equally, well, I wouldn't say suffered, but undergone change. In this report, you took it a step further. You talked extensively about the impact of COVID-19 and fed us a lot of numbers that scared basically the living daylights out of me. Alex, I have to admit that. It's very scary. But, you know, face facts, it's going to have long-term economic impact. And if you see the numbers into the face and you realize what's going on, it's really, I wouldn't say it's devastating, but it's really time that we face the consequences. So if you look at to this changed landscape of e-commerce that we discussed last week, there are of course other economic, areas impacted, like, the lending space, gaming, financing, mortgages, banking. How do you see the future of digital currencies in that field?
Is that me first or Eric first?
Yeah, I would love to hear you both, but you go first, Alex.
Sure. Well, let's start with digital currencies. The big news of the last week since we posted the Lightman report is that China is coming up with the digital yuan, and they have 19 different vendors to help them, including McDonald's and Starbucks. And I've been about 30 times to China, and there are McDonald's everywhere, there are Starbucks everywhere. And so this means that the digital yuan is going to be everywhere. And if you look at the way that money works, I think that less than 1% is in paper money, paper currency, and coins. So it's very surprising to me that other nations haven't jumped on the bandwagon for cryptocurrency, because you can transfer very quickly. You don't have a lot of middlemen in the way, and this seems like it's going to, I'll predict this is going to be a success in the sense that it will grow. It'll have widespread adoption among merchants, so the supply will be there, and then I think that people will use it also, and so there'll be the demand. So with this COVID-19 impact, the big impact is disruption of supply, disruption of demand, disruption of markets, and disruption of information sources.
If I hear you correctly, what we see is the entrance of, I would say, established parties like, Chinese central government with its own digital version. We also have France experimenting on its own with a digital euro. We had recently an announcement of the Dutch National Bank, who stepped into the market as, a party into this whole crypto idea. I've got no idea what they're going to do there, but, the night before they announced it, they actually put severe traction on the market of everybody dealing with cryptocurrency having to have an extreme license, which is going to cost so much money that hardly anybody's going to stay here. So most of that business will go probably to Germany, Estonia, other countries. You see that they are trying to grip this market in the old-fashioned way that they always used to. That's my feeling about it, to use the new crypto situation to their own old ways. So Eric, when it comes down to you, I know you are a big fan of decentralized financing, as in, having a whole new era of control over money transfers, basically. So if you hear Alex about all these developments, which in my view are mainly, I would say, established economy situations, gripping this new market as they see it as an escape, as a newbie that might relieve much of the stress that they currently envision due to the crisis that's going to be much worse than 2008 will look like a holiday trip, basically, a lot of people are saying. So if you compare this to what your views are to decentralized finance, could you maybe explain a little bit as to what Alex was saying?
I think it's very interesting. I wasn't about to talk about the cryptocurrency much today, but since Alex and you brought up, I think cryptocurrency is interesting, and the Chinese central bank just issued this. They call it I think their version of digital currency. Interesting thing was before I was worried because I thought the new digital currency was KYC and AML. Like you have to reveal who you are to own that currency. It turns out to be false. You don't have to. Meaning it just replaced the current cash. Meaning you can have it without reveal who you are. And if you compare to Alipay or say the WeChat Pay that is widely used in China, it's different because Alipay and WeChat Pay are KYC. So you need to tell people who you are before you can use Alipay or WeChat Pay. So you need to have a bank account. Let's say for a foreigner walking into China, you have to have a Chinese bank account before you can use WeChat Pay or Alipay. But for the new Chinese digital currency, you don't have to. That means for a foreigner, you can actually walk into China and make the digital currency. You can earn it and you can spend it there. So it's like anonymous, it's like cash-like digital currency. So I think this is great. This is great. I think Alex said that the whole digital currency situation from Bitcoin last price up. Maybe you noticed that the top 10 or top 20 coin market cap volume, not volume, the market cap, there's a few stable coins. So
Yeah.
stable coins are very interesting. I used to think USDT or some other stable coin is the way to go. Now, the Chinese digital currency, if it's not KYC, then all of a sudden it becomes more interesting. It could become a way of replacing USDT. And maybe next bull market run, you will see that particular market cap will be blown to, even bigger than Bitcoin. This is something I love to see. So aside from that, I always refrain to talk about digital currencies. I more like to talk about digital assets. I think digital assets are the real future of DeFi, decentralized finance. So I think this time we have a huge financial crisis brought upon by COVID-19. And it's actually a great opportunity that digitize a lot of things. Yesterday, I received an email from the Metropolitan Museum from New York City, telling us they have a virtual gallery open that you can actually go in there and watch, good, piece of artworks, right? Then I thought, is digital art a digital asset? I think it is, right?
Yeah.
Yeah, and I actually last quarter I stumbled upon a few projects. They're actually doing a lot of things. Not only digitized art, they also have digital gallery. That kind of digital gallery is, if you're an artist, you can actually rent a piece of virtual land, a virtual room to exhibit your artwork, and you can auction out. This is what we call a decentralized finance. So not only currencies, but a lot of assets like art, like intellectual properties, it can be tokenized. It doesn't have to be a lot of tokens. So each art can be just one token. That would be very interesting.
Do you see, if we look at this and hear Eric's view on decentralized assets, Alex, do you think there's going to be cross-bridging a lot with existing environments? Like we just heard the example from the Met, virtual gallery, digitalizing assets, like existing assets that, are tangible, that you can actually hold, like a painting, or the real digital situation where you create a digital asset being digital itself and being an asset, just being digital and not tangible anymore. Do you see a lot of cross-bridging, or do you think it's going to be either the one or the other?
Well, I'm excited by this question because it's one of my favorite tools of looking at the world is something that MIT and Harvard came up with, which is called economic complexity. And the basic idea is that if you're a country that just has one product, perhaps let's say a pineapple, then you're going to be in terrible shape because other people have pineapples and it's a commodity price and you don't get any kind of premium. Yeah. But if you have chocolate and you have pineapple, you can sell chocolate, you can have pineapple, and you can have chocolate covered pineapple. And then if you have each product that you have more possibility for bundling. You have combinatorial explosion, 1 times 2 times 3 times 4 times 5, all that. And so what happens?
Yeah.
What happens, because we're all now going at home and we're shopping at home and we're being digital, and the Best Buy close to me is sold out of computers and laptops and everything for doing computers and cameras. I got something called an ATEM Mini for the studio, and I bought one, and then the lockdown was announced, and now they have a back order for thousands of them because a lot of people want to do streaming from home and be able to move between streams. And so once you go digital and once you go blockchain, once you go online, you have the possibility of combining many products together and having bundled offerings that are unique. And with that, you can actually set your own pricing. You don't have to have apples to apples commodity pricing that drives down the margins. And this is a big opportunity for the United States because we have a really, really complex service economy.
If we look at the current situation, would you say that it's easier now in the digital era that's been, I would say at top speed because of COVID-19, that it's easier for entities, for people, for companies, for countries to create this economic complexity and therefore be less vulnerable? Or do you...
As long as they have good infrastructure, as long as they have the servers and the load balancing, and they have the bandwidth, and they have bandwidth to the home, like places that have fiber to the home or fiber to every building, like I think roughly just under half the people in Korea live in the Seoul metro area. So out of about 52 million people, about 25 million people in the greater Seoul, and they have so much Wi-Fi, fiber, everything, 4G, 5G, everything. They're really advantaged. And the key thing is, do you have low latency? And so those nations with the lowest latency have an advantage over those that have a higher latency and have intermittent levels of service. So basically, whoever has the best internet is going to have better economic complexity. And economic complexity, according to MIT and Harvard, is the #1 determinant for future GDP growth. So the more economically complex you are, the faster you'll grow in the future.
What that means that countries that now take a heavy hit, already having, I would say, a vulnerable economy, like, countries in Africa and some countries in South America, already vulnerable because, the economy already suffered during the crisis of 2008. They have not fully recovered. The economic complexity is not very large. They have not the means everywhere to go on the internet. So I would say that if I hear the both of you, those countries, are hurt extra by COVID-19 compared to countries that are more well developed, like Southeast Asia, like China. I mean, internet in China is, a tremendous development over the last 20 years. and of course Western Europe. So everybody investing in that infrastructure now takes the advantage of having the ability to do economic complexity. If I look to myself, I already was decentralized digital. So for me, it's easy. For Eric, it's easy. For you, it's easy. But you see I would say, the more tangible economy, like restaurants, like bars, all that economic complexity is not there. So it's more difficult for them to survive, basically. So are we then coming to the conclusion that we say the countries that had less economic complexity before COVID-19 have less infrastructure, also less of a healthcare, resilient system maybe, are they're going to be hurting double in this case? Is
The
that what?
answer, I would say yes, except for Africa, because Africa has a saving grace. And the saving grace is that Africa is the world's leading adopter of mobile money, using money on mobile phones. So more than half of all the people using mobile money, only about 1 in 5 people, 1 in 6 live in Africa.
If we now look to something like the new platform that Eric is launching, like with DNA, do you
Yes.
think that in these development countries where, the survival technique basically of the new, I would say, digital economy is an eye-opener for them to hop on the plane basically and take the advantage of having a platform who do that for them, as long as the local speed of the internet will, give them access enough?
I think it's important to have an all-in-one encompassing platform that has like DNA, Metaverse, dual chain.
And that is exactly, Eric, to go to you to close it off. We're going to have a chat every week, guys. We can talk about a lot of subjects the coming 35 weeks because we're going to be online every single week. Eric, to close it off, I would really like to see, what do you see as the first economic opportunity that, the DNA dual chain solution is going to offer to what I would say people, countries, populations that are really in need of new development? I mean, we will cope with it in Western Europe, we will cope with it in America, but we won't cope with it in other countries. One of the things that I would see is, you got DNA vote for your super nodes in place. Due to the latency questions, it would really be something if some of these countries were to hop on the bus and, join in the new development, because this would be, in my view, an excellent chance for some people in Africa, some people in South America to be an early, I would not even say an early adopter, but an early innovator. So how do you think we're going to get to these people? Because to make them see, there's an opportunity here for you. It won't cost you anything. You earn a little bit and you can build and grow on that. So how do you see we could achieve that?
Well, bringing awareness is very important. I mean, nowadays everybody stay home. The connection is so important, right? So uh, everything's online. So I think a lot of people from Africa can actually see this. We have ambassador outreach program in Africa. They're actually doing pretty well in Nigeria and Ethiopia. Ethiopia, it's pretty good. We outreach a lot of African country, and we're doing South American country as well. And I think it actually, I mean, DNA actually bring a lot of opportunity to those countries. I still remember the days that China's economy boomed uh, along with the mobile internet. So the whole Chinese financial situation just skipped the traveler's check, skipped the visa, the credit card uh, stage, jump directly to mobile payment, right? So we skip so many steps. But for Africans and for the Latin America, there are a lot of things they can skip too. Like most of the African country, they don't have a credit check bureau. They don't have that, but they don't need if they use DNA. You have a digital identity. You have the record of doing business with others. That's a decentralized credit check for you, right? So a lot of stuff that they can jump ahead, and I don't know, maybe next decade, some African country can emerge, become a superpower on chain. Who knows, right? But what's key is let's not spread the virus into African country. It's very vulnerable at this moment.
Yes, I know. I want to.
That's my biggest worry. My
Yeah.
biggest worry is that. Yeah.
Well, let's hope that, they keep it under control like we do worldwide. I want to thank you both for this interview. Looking really forward to your next Lightman report, Alex, so we can have a weekly discussion about what's going on worldwide with the fintech, all the decentralized development, and all the new opportunities that we are, really, I would say, accelerating because of COVID-19. I mean, it has a lot of negative effects worldwide, but this is definitely one of the positive ones, that this movement is going forward so rapidly that we've never expected that this fast would take off this fast, whether in real economies in China, tangible, like the Chinese government doing the digital yuan, but also on a very different level with individuals worldwide hopping on the train of, decentralized, digitalized, working together in groups and communities like DNA is now building. So I want to close this off. Thank you both very, very much. Hope to see you next week, guys. And I would
See you
say
next week. Bye bye.
Thank
Bye
you.
bye.
Bye.
bye.